Every time I make a video on Bitcoin where I am not that bullish, where I think that the price might be going down, I get one comment very often. And that comment is, this time will be different. And the main argument why this time will be different is because now we've got the Bitcoin ETF. There's now money flowing from traditional finance, from Wall Street into crypto, and that will create a super cycle. Now that's an interesting thesis, and I want to look at this thesis in more detail in this video. I want to see what is actually driving the price, how much demand is coming from the Bitcoin ETF, and how does this demand relate to other kinds of demand and supply drivers. Let's have a look. So over here are the daily flows into the Bitcoin ETF through the various instruments. And in the early days, we have seen actually quite a bit of outflows because of GBTC, the Grayscale Bitcoin Trust. So before there was an official ETF, there was the Grayscale Bitcoin Trust, and that then got converted into an ETF. Now people moved away their funds from the Grayscale Bitcoin Trust into the way cheaper ETFs. The management fee is way lower. And that kind of conversion happened through the first quarter, a bit longer than that of 2024. Now we don't see that many outflows out of GBTC anymore. We see mainly net inflows. Now this is a chart measured in Bitcoin. Here's the same chart measured in US dollars. It's interesting how we have seen an all-time high in inflows on the 7th of November of 2024. So there might be a long-term growing amount of US dollars that get into Bitcoin over time. But instead of looking at the daily flows, let's zoom out a little bit and let's look at the balance overall, because obviously the balance doesn't fluctuate that much compared to the individual flows every single day. And so here's a chart of the asset under management for the Bitcoin ETF measured in US dollars. We had our initial adoption, then we went sideways for a while, then a second run up. But what's very important is that this is measured in US dollars, and the price of Bitcoin also fluctuated quite a bit. When the price of Bitcoin isn't going up, but it trends downwards, there's no surprise that the assets under management for those Bitcoin ETFs also has a hard time climbing. And so let's have a look at the AUM, the assets under management measured in Bitcoin. So now we are taking away all of the price volatility of Bitcoin. And I like this chart a lot because it shows very little volatility. It shows us relatively constant growth over time. In other words, over time, more and more Bitcoin gets scooped up by traditional finance, by Wall Street. Now, here is what I believe is very important. It's relevant to understand how quickly does the Bitcoin actually get bought by Wall Street. How does this compare to the Bitcoin mining, for example? Because we all know that Bitcoin supply still expands every year because of the Bitcoin mining. New Bitcoin gets issued to all these huge data centers. How does this issuance compare to the purchases through the ETFs? The reason, of course, why this is important is to understand whether or not long-term the supply of Bitcoin tends to shrink or expand. And when the supply tends to shrink, this might be a good price driver long-term for Bitcoin. Now let's make the calculation together. We start in January of 2024 and we go to January of this year. We've got 1 year of data, and our first data point is a balance of 640,000 Bitcoin. And now we are at 1.14 million Bitcoin. So exactly 500,000 Bitcoin got scooped up through the ETF. Now let's work with the assumption that the growth rate will stay exactly the same. The current supply of Bitcoin is 19.8 million. And so we've got 2.5% of Bitcoin supply that got bought through the ETFs in the last year. How does this compare to the mining? Here's the Bitcoin inflation schedule. Every 4 years, the number of newly issued Bitcoin gets cut in half, and currently we are at 0.84%. So the Bitcoin ETFs buy 2.5% per annum. The miner issuance is 0.84%. So the ETFs are buying up Bitcoin roughly 3 times faster than it gets mined. And so let's work with two assumptions. The first assumption is that the Bitcoin that's bought with the ETFs is probably going to stay with the ETF over the long term, right? People want to just allocate towards Bitcoin and hold over the long term. That's the first assumption. The second assumption is that the growth of the Bitcoin ETF will be the same going forward as it has been in the last year. With those two assumptions, Bitcoin's liquid supply will shrink every year by roughly 1.6%. And so this does have relevant impact. Just have a look at the price development of Bitcoin relative to the ETF flows. So on the x-axis, we've got the ETF flows. On the y-axis, we've got the price performance. This is 7-day smoothed out, so there is a bit of an average effect here to reduce some of the noise. But again, we can see how very nicely there is a positive correlation between the two. A lot of ETF inflows means a rising price. Not so many ETF inflows, or rather outflows, tends to mean a lowering price. But of course, this is just correlation. This is not the only price driver. That's why we see some kind of a cloud of data points and we don't see just one straight line. There are other price drivers, and I believe those other price drivers are even more important than the Bitcoin ETF. Let me show you what I mean. Have a look at this. In green, we see the ETF flows. So how many Bitcoin gets scooped up through the ETF instruments. And this tends to be in the positive area. In other words, the ETFs tend to buy Bitcoin. But then we've got something that fluctuates much more and is much larger in magnitude. What is that? It's the long-term holder supply change. What's driving the Bitcoin price and what makes rallies stop at one point is selling by the long-term holders. The long-term holders tend to make most money in crypto. If you're dollar cost average into Bitcoin and then you sell whenever there is a price rally, you're realizing a lot of gains. And so once we have seen the outflows from those long-term holder wallets, we've also seen how Bitcoin's rally stopped, right? We went all the way from 16K to 73K. And it was mainly the long-term holder outflows that caused the rally not to continue. There was still demand through the ETF, but that could not offset the selling by the long-term holders. And the same is true the other way around, right? Once the long-term holders start buying back in again, then the bear market stops. So that's when we stopped moving from 73K all the way down to 54K, because then the long-term holders got in. Now they tend to rather sell again, right? The selling activity peaked at roughly 100K. Again, the ETFs bought, but they didn't buy nearly as much as the long-term holders sold. And so yes, it's great to have the ETFs, and yes, this does shrink the long-term supply, and yes, this will help Bitcoin outperform most other asset classes long-term, but the ETFs are definitely not the major price driver. I think the major price driver again are the long-term holders. Now, how do the long-term holders behave? When are they buying? When are they selling? When are historically good buying opportunities, and when should we rather exit? Now let's look at the buying. I very much like this metric. This is the realized price. This is the average cost basis of the market. And when the current price is below the realized price, which is here in orange, then we've got a historically great buying opportunity. We've seen several of those opportunities in the past, and they occur every 3 to 4 years. The reason why the long-term holders tend to rather be on the selling side in the last few months is likely because they are realizing some of the gains. That's why the realized price is now creeping up. But the best time to buy is when the market in aggregate is not in gains, when it's in losses. That's when long-term holders are not selling. When you've got an average cost basis of $41,000, you're more than 2x in profit. You might rebalance your portfolio sometimes and realize some of that profit. But when you're in losses and you long-term believe in Bitcoin because you own that much Bitcoin, you've learned a lot about it, and you're currently not in profit because of the short-term volatility, then you simply keep on holding, right? The selling pressure goes down during times like this. And so I strongly believe that we are not at historically cheap prices. Even though a lot of people say this time will be different, we will see a super cycle, etc. I do believe that the Bitcoin ETF has a long-term positive effect, but I do not think that it will change the nature of the cycles. I think the nature of the cycles continues to be driven by the long-term holders. They move much more Bitcoin. And so it's always interesting to look at short-term leverage as well. So there are two major derivatives on the Bitcoin price. The first derivative is the perpetual futures. So that's what we see over here. When there's not a lot of leverage in the market, when the perpetual futures are not traded much, that's when you want to buy. And you want to sell when the exact opposite happens, when the perpetual futures trading volume is very high, when people are very much speculating on BTC. And again, currently we are not very low historically, right? Those are relevant movements, right? From 67K down to 16K. That's a drop of more than 70%. Now here's a second kind of derivative instrument, again another type of bet on the Bitcoin price. It's the options open interest, and again this is not low whatsoever. People are speculating on BTC heavily. There is leverage in the market. This kind of demand is not long-term demand, this is short-term demand, and short-term demand might succeed, and when it does, then the price tends to rather deflate. I don't have a crystal ball either, I'm simply just sharing data. I simply think that there will likely be better times in the future to buy Bitcoin cheaper. I don't think that this is the absolute low. All the data does not point towards that. This does not invalidate the long-term bullish thesis on Bitcoin, right? If you're buying Bitcoin now and you're holding this over the next halving and over another halving, and you're basically buying this for your retirement or maybe for the education expenses of your kids, then by all means simply continue hodling. But if you don't feel comfortable with a 70% drop from here, if you have too much allocation to Bitcoin and you would potentially even sell after going down 50 or 60%, then you're definitely over-allocated, and then probably now is not the right time to own too much. It already depends on how you're set up in general, right? What is your income relative to your wealth, right? Is your wealth already many years of income and you can't really afford too much of a drop? What other assets do you own? Do you also own some property? Do you also own some stocks? Are you somewhat diversified and you can digest more of a drop? What is your time horizon? Do you want to spend that money in 6 months or in 6 years? All of those kind of things matter. And so medium term, over the next months, I'm not sure if there's that much more growth in the Bitcoin price. I don't know either, but I do know that we're not necessarily cheap. If you currently have zero allocation to Bitcoin, then maybe don't even try too much to time the market, right? It's probably better to dollar cost average from here, because we are not historically low, than to deploy everything right now, right? So let's say you've got 50K and you want to deploy this towards Bitcoin because you already have a lot of stocks and property, etc. You've got 50K laying around from the bonus of your job or whatever it is. You want to allocate this. Probably don't buy half a Bitcoin for this. Simply just buy 0.1 Bitcoin or 0.05 Bitcoin every month from now. And as we drop further, in case we do drop further, then maybe consider buying even more. But that's, I think, is a better strategy. The only time to be 100% risk on into crypto, I believe, is when the market in aggregate is in losses. And during those kinds of times, right, when the price is below the realized price, nobody wants to know about Bitcoin. Everybody will call Bitcoin a scam. Everybody will say that this is the end. And that's the time when to buy. It's when FTX is collapsing. It's when Terra Luna is collapsing. It's when Mt. Gox gets hacked. It's when Silk Road gets hacked. It's when the ICO boom is over. It's during those kinds of times. Now, here's the thing. There are plenty of topics within crypto that aren't very sexy, but that are, I believe, very vital to make money long term. For example, concepts like correlation. What we see over here are correlation coefficients. Did you know, for example, that most altcoins tend to be more correlated with Ethereum than with Bitcoin? In other words, it's not when Bitcoin goes up that the altcoins go up as well. It's rather when Ethereum goes up, then the altcoins go up as well. Or did you know that the correlation coefficient of the S&P 500 to Ethereum, and thus the altcoin market, is actually quite volatile? In other words, it does make sense to also own stocks, not just Ethereum, not just crypto. The common narrative is that when traditional markets go down, that crypto tends to go down as well, right? That crypto is simply just a levered bet on, say, technology stocks. That's not the case. The correlation coefficient is relatively close to zero. Or do you know the long-term expected returns of various asset classes, of, say, gold, of say the S&P 500, of Bitcoin, of altcoins. When we don't just own crypto, but we also own property, for example, and we've got that portfolio, what kind of returns do we need in order to beat monetary debasement, but also in order to at some point to get financially free? How much money do we need to have enough passive income to not having to work anymore? What are expected long-term returns, and how much should we actually allocate towards crypto and towards property, towards stocks, gold, bond, etc.? What actually makes sense? When there are tens of thousands, hundreds of thousands, maybe even millions of dollars on the line, not having this properly nailed down is a huge problem. And when the market isn't that great anymore and the upside for Bitcoin could be somewhat limited, how can we still make money? How can we make money from charts like this? What we see over here is Balancer relative to Ethereum. We can make money by shorting this. Balancer has very bad tokenomics, the supply increases over time, and so it tends to do worse than Bitcoin and Ethereum over the long term. And we can make money from that, again, from the relative valuations, not just from US dollar valuations. When we look at how quickly is the monetary base expanding, and we put this into relationship to how quickly are salaries increasing, we actually see that pretty much everybody is falling behind over time. And this is not just true for the poor people, this is even true for the top 5% of earners. By the way, if you earn $500,000 per year, then you are in the top 5%. But yeah, data like this is useful. And those are not necessarily the sexy topics that work well on YouTube, right? On YouTube, it's the 100x altcoin gems that get all the clicks. But when you talk about diversification and correlation, etc., people just fall asleep. But it's the long-term planning, the long-term proper allocation towards different asset classes that actually make the difference. And so have a look at all of this. Those are tutorial videos of the premium membership of this channel. It's down below, thebitcointrader.com. There's more than 100 tutorial videos in total. What are my favorite crypto macro indicators? How do interest rates impact different asset classes? We've just seen how the market got spooked because the Federal Reserve might get more hawkish. Or how do we adjust our returns for risk mathematically, right? Everybody can get more returns by increasing the risk massively, but the idea is we want to get the best returns for the risk. And so there are ways to calculate this using alpha and beta. Those are all very complex topics, but I strongly believe that it's the skilled people, the people that have most knowledge, that tend to make most money over time. Now, besides all of those tutorial videos, there are also various chats in premium where I try to be active as well. So in case you've got any questions, just tag me in a message in those premium chats and I try to reply. The membership is currently $165 US per month. This is not for people that only have a net worth of $1,000, right? This is for people that actually have to manage wealth in the tens of thousands, preferably even hundreds of thousands of dollars. There is a 1-week money back guarantee as well. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. Now, if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.